timing. It's time to talk commodities. Let's go across to Manisha for the latest. Manisha, what's the big headline?
Well, can't match on what we've done in sense of cricket, but I want to talk about the crude oil prices because we have continued to decline onto this one. It's trading at a two-week lows right now. We've seen 3 constant months of decline, and this, by the way, is going to be a third straight yearly decline coming for the crude oil prices as well. We're down by nearly 15% for 2025 as we speak. Well, the crude prices in the recent days have seen some support, especially after Russia's Tuapse Port suspended fuel exports and refinery operations as well. This is after recent barge of Ukrainian drone attacks on various refining capacities within Russia. So that supply concerns have given some support to markets. But apart from that, there's nothing else which is holding the crude oil prices on the higher side. Because when you look at the US stocks, we are looking at 5 million barrels of a jump in the last 1 week itself. So US crude stocks have been much higher. If you look at the markets in sense of Chinese demand, that also has not been so strong. There's an estimate that in 2026, you could be looking at weaker Chinese demand as the EV segment there continues to grow. There are similar sentiments coming in from Europe as well. The third important point, of course, is the strength in US dollar index. We also have seen probability of almost no rate cut for the month of December. That seems to be bothering various asset classes, including commodities and especially crude oil prices there. And then apart from that, it's not just the US inventory is increasing, but the US production has hit a record high in the month of October at 13.64 million barrels per day. So there's enough and more crude. OPEC Plus also has been increasing, has increased to the tune of 2.9 million barrels per day in this current year itself. As far as the overall supply concerns, a supply surplus is expected. That is on the higher side as well. OPEC believes that you could be looking at 1.3 million barrels of a demand growth estimate in the next year. But when you look at IEA, they have a much lower growth estimate of around 0.7 million. So the demand growth for next year isn't so strong, but the supply growth definitely on the higher side. And that is the next number coming in on your screen there. So these are supply excess outlooks coming in from various agencies. Mercuria, which is the largest oil trader in the world, believes that 2 million barrels per day of an excess supply is what you could be looking at in the next year. 4 million barrels per day of an excess supply is what OPEC and World Bank believe into. And CIBC says that 1.5 to 2.5 million barrels per day of an excess supply is what you could be looking at. So anywhere between 2 to 4 million barrels is a consensus coming in there. Now let's talk about the prices. And this year, as I said, it's a third straight year of decline in prices. And next year couldn't be any better as well, is what the belief is. World Bank believes that $68 a barrel is an average price that you could be looking at in next year. CIBC has a lower number at 50, and that really is a headline really, because 7 Report research says that with the kind of supply increase that we're looking at, there's a possibility that you could be looking at crude oil prices declining all the way to $35 a barrel as well. And that is the most bearish outlook, by the way, till time there. The rest of them really are talking about in 50s and 60s at this point in time. You have Citi at 62, Bank of America 64, and then JP Morgan, Morgan Stanley, anywhere between 58 to 60 as well. So we could be looking at lower averages of what we've done in this year. But well, yes, there are some headline grabbing numbers coming in too.
Manisha, thank you very much for that. So something to keep an eye out on, and some of those forecasts for especially oil marketing companies, very, very important, of course, on macros as well.